All right. Hello, everybody. Just wanted to recap a trade on ADRO. I called this out over the weekend, and it ended up being a fantastic trade. The key point is being prepared. This is a trade I've been watching for several days, actually a couple weeks, and just kind of lying and waiting for it to break out of a particular channel, which I'll show you here in a second. And when it finally did on some significant volume, we began a different phase in the overall cycle of this particular ticker and decided to jump in. So let's go ahead and talk about it. So ADRO is a ticker that I called out last weekend on February 1st, which was Saturday. I called it out and I said, hey, I've been watching this one for a couple weeks, and I put it on my watch list for the following Monday, February 3rd. And in my preparation, as you can see here, I listed a significant number of indicators which are part of my trading setup in this particular breakout pattern. It was actually a swing trade, so I held it for a couple of days and scaled out and finally closed my position today. Today being Tuesday, February 4th. And it's basically my setup, right? So I have clear indicators. If the indicators do not line up and present the best setup, I simply don't trade. So ADRO, clinical stage biopharmaceutical company, focusing on the discovery, development, and commercialization of therapies to harness the body's natural immune system for the treatment of patients with challenging diseases. Now, technically, this is not a coronavirus trade. However, it is what we would call a sympathy play, kind of in the same sector, a company that produces products to fight infectious diseases and help immune systems. So let's look at the chart here. So as you remember, on February 1st, I called it out. And you can kind of see I've been watching it here with this little channel. This is sometimes referred to as Darva's box. You can look it up what that means. But basically, this has been trending since September in this kind of range, right? Back and forth. And you can see here my 20 and 50 simple moving averages, 20 being the yellow and 50 being the red. Just kind of going back and forth. We have a crossover of the 20 into the 50 here. We see a little bit of an uptrend, but then a continued downtrend until you get the support line. But volume staying pretty consistent. Now, as you see here, I was talking about, and if you've seen my previous posts, talk about how tickers go through stock cycles, right? So in this particular cycle, it leaves kind of this basing consolidation phase and moves into what's called a markup or expansion phase. And that's really where you can have some significant opportunities to make money. And so as you can see here, we kind of had a fake out, right? A fake out, breakout, came back down, and I was watching it every single day. I wasn't convinced until right here, which was Friday, January 31st. I didn't really see it until the following morning on Saturday when I saw this candle pattern basically break out of this consolidation for a second time, but also on some significant volume. Look at that volume right there. Okay, so that got me really interested. So it closed at 168 that day, and I called it out and said, look, this is definitely a buy, right? Last signal is a buy. And the price to enter would be 168, okay? Putting a stop loss at about 20 cents below at 148 and a target price of 235. So let's talk about why I chose those levels. Again, it's all about preparation. So if we look here, there's a strong chance of it going up on second day, not only on higher volume, but we're kind of breaking out of this major long-term support level going back to the summer of 2019. So I knew that if it was going to open up strong or at least continue trending the following day, that we had a significant chance of, kind of breaking out to an even longer support area of 235, as you can see, going back to really about a year ago, right? January of 2019, even going back to December of 2018, another large area of resistance there. So as you can see, not only did I enter the trade, but I ended up adding more at the end of this day. And today was a fantastic day to ride all the way up beyond a major psychological, resistance level of $2. Remember, half dollars and whole dollars are psychological levels where a lot of traders will take profits and sell remaining shares or portions of their shares. But really went all the way up to a high of 230, and me selling the remainder of my shares really into that strength. So this definitely has a lot more room to run. The one thing that concerns me is this thing right here. Earnings are about to be reported on February 26th. Now, ideally, it is close to my target price, so I decided to exit with earnings coming up. You want to of course buy the rumor, sell the news. This doesn't have news since January 10th, but something's definitely going on with all this volume here. Being that it's so close to earnings and it actually almost touching really the target price, the smart thing to do is just get out of the trade and take your profits, right? You never go broke taking profits. So definitely a very good swing trade coming out of expansion. But now what I really want to show you is not so much the result. I want to show you my process, right? So what I do is I go through and I identify the pattern. Obviously, it's a breakout. I use FinViz to grab a lot of this information. So let's switch back and forth here. So here's FinViz. As you can kind of see, it's been trending, it's been trading in this range for a very, very long time. There's a double bottom here, which is a bullish sign, but there really hasn't been too much activity until really the beginning of February here. So I like to trade stocks that are anywhere between 50 million and 2 billion market cap. Okay. I also like to see the shares, at least above 20 million shares. That gives a pretty good indication that there's enough in the public float out there for amount of shares to be traded for it to make some significant moves, but not too quick of moves, right? Institutional ownership, I like to see this at least 50. Again, this is an art, not a science, stock trading. So just because it's a little bit less than 50%, it doesn't necessarily mean that I'm not going to be interested in it. I really want to look at the totality of the circumstances with this particular trade. I like to see all the SMAs, the simple moving averages, bullish in green. That's an indication that the market sentiment is bullish. But this is critical, volume, right? So as we saw here, 3 million shares traded here, just over 1 million shares traded yesterday, and I believe 2.9 million shares traded on Friday. So there's definitely a lot of interest. And here's a perfect example of why you should trade the chart and not the news. News is important. Catalysts are definitely important. I even indicate why you have to have catalysts, right? It's part of the indicator that you need to have to help increase your odds of making these plays successful and profitable. But just because you don't have news doesn't mean you shouldn't trade it, right? You got to look at the totality of the entire trade. Other things I like to look at, of course, I want to keep an eye on when earnings are going to be reported. I use TradingView, and it's very visually pleasing. It tells you right here, February 26th, earnings will be reported. And if you actually click on it, it tells you that the estimate is that they're actually reporting a negative 20-cent earning per share estimate, despite analysts recently just actually upgrading the stock. So something's going on, right? Somebody's buying up shares. Either earnings will exceed estimates, but who cares? You don't want to be playing that game. You want to stay away from trading these stocks and earnings. You don't know what could be said during these earnings conference calls. It could be bad. It could be negative, especially if you're swing trading and you have overnight positions. Very, very risky, right? In the business of stock trading, you want to minimize your risk as much as you can. So if you're holding overnight into earnings, this could easily tank. It could easily go up, but again, you don't want to be playing a guessing game. You want to be reacting to the market, not trying to predict it when it comes to earnings. So other things I look at is relative volume. I like to see relative volume above 2. I can get into these in other videos, but just kind of want to give you a high-level indication of some of the indicators that I look at. I also like to see average volumes. The average volume of shares traded, 985,000. Very, very good. I also like to see the ATR, which is the average true range, to be less than 1. Really, the lower it is, the higher possibility that it's going to move, and it affects volatility. And a few other things. So again, if we go back, I kind of walked through what I just walked you through with FinViz. Definitely want to keep abreast of what the bears are doing, right? So in this case, we have 54% of short volume. And remember, short volume is basically the number of shares actually borrowed, but no short position has been opened, right? So you have 54% out there that has been borrowed in terms of shares available to the public float, but no short sell position has been opened. Short interest is slightly different. What that is that is the number or the percentage of the open short positions that are actually involved in this particular trade at any given moment. So what this means is that of the shares that are trading right now, 3% of those shares, traders have an open short position that have not yet bought back or covered. Okay, so just keep that in mind. I like to keep that on the radar because it's important. It could certainly affect and help you understand level 2, right? And what's going on there. No news catalyst, but we have a technical breakout on the chart as I indicated. Again, we're kind of going through here. I'm looking at, as part of my preparation, I'm looking at the long-term chart. So what is the long-term chart on this? Well, we have consolidation, but now it's bullish, right? We want to indicate that. We also want to look at what the market is doing. Now, very interesting what's been occurring with this whole coronavirus. The market's been hot one day and then cools off the next day. And then it was hot again today. So we kind of have this back and forth. So I indicated that it is bearish, even though today is bullish. The gap percentage, this is basically the gap percentage on the day. So today it gapped up 20%. On this particular day when I called it out on that Friday trade, which is the day before I called this out, when I found it on Saturday, it gapped up 24%. If you look at my other videos, I go through chart cycle stages. We're in the second or expansion. So stocks typically go through, a range bound accumulation period. Then they go through this, increasing markup phase. And then they eventually go through what is like a consolidation phase that kind of looks like this before they go down through a contraction period or a markdown phase. And then the cycle repeats again. So we have essentially broken out of this accumulation phase where investors, institutional buyers are accumulating shares. And now we've kind of broken into this expansion phase. All right. I also like to check, of course, before I enter a trade, I like to see where the VWAP is. Doesn't really affect the daily, but it helps time my entries. I like to have the price action above the VWAP, which is the volume weighted average price. Look it up if you don't know what it is. Watch some videos on it. I also like to see the bid-ask spread. I like to be less than a penny. You don't want to mess around with wide bid-asks. It affects your entries. It also it affects the volatility of the stock in terms of how you enter with respect to your entries. I also like to check the time and sales just to kind of see what's going on as my final preparation before liftoff, of course, right? Um, I definitely check the SEC filings. This is part of my preparation. I try to avoid any stocks that have financing or maybe warrants out there. Um, any bankruptcies. I try to stay away from all those things. Those things scare off investors for obvious reasons. We can get into in another discussion. Um, I also like to see if there are any recent purchases by executive teams or even a CEO. Insiders have access to shares. They also know their company better than anybody else. They have access to information. So if they're buying, they probably know something. So in this case, there hasn't been any recent CEO buyings, and I'm talking about recent within the last month or two. Okay. Um, and then, of course, I lay out my entry price, my stop loss price, right? If the trade gets below a certain level, a key level, I will exit the trade because when it gets me, and don't want to let a small trade get into a big disaster. Um, there's an important adage out there in the stock trading community that says, "Hey, it's okay to be wrong, but it's not okay to stay wrong." So that's why you want to cut your losses. Very, very important rule. It's all about risk management and improving your odds. And you don't want a silly mistake to wipe out a series of gains. It affects your not only your stock account, but also your mental account, psychological account. So, and then of course my target price, which is always dictated by the chart. It's not something I'm just pulling out of a hat. It's really just clearly where I think the market will find it to be overvalued, or at least reach some sort of ceiling, right, in terms of price. And then I say, my signal on the chart, my interpretation is that it's a buy. So this is obviously not a recommendation for anybody, my disclaimer, but just kind of showing you through the process. Now, I wanted to show you this. This is the lion.com. This particular website I will use for just monitoring daily gainers, percent gainers, and dollar figure gainers. Good for shorts too, if you're looking at percent losers or percent dollar losers. But I just kind of wanted to show you this because here we are, ADRO. It showed up as one of their top 10 or top 15 trades here on their main website, saying that it closed at 224. It's up 20%. So here's a perfect example of when you prepare. You can catch these a couple days before. Some amateur trader coming in and seeing this and wanting to get into the trade now. And like I said, it's still not too late, but the train has definitely left the station with this one, right? Still a lot of room to run, but again, with upcoming earnings and it almost hitting my target price, in my world, and according to my trading standards and rules and guidelines, uh, this is done for me. Okay, so that's it, guys. Just a great trade recap. Just wanted to share it with you. If you guys have any questions, feel free to um, comment, ask the question on this particular video post, or if you have any recommendations for anything else you'd like to hear about, feel free to make a suggestion. And if there's nothing else, I will leave you with that. Have a great day.